Well, still under pressure. In fact, we're drifting even further as we speak right now. 65 points lower for the Nifty futures. Bharat Forge down 6.5%. Glenmark, Torrent, City Union Bank, PNB all reversing their gains from yesterday. Within the Nifty, Unilever is down 1.5%. And the entire IT pack is the one which is weighing heavy, along with L&T, which is also down 1.25% as we speak right now. But let's try and understand what's really happening within the CV industry, and let's just throw focus on that. When it comes to the CV space, a lot of question marks arising whether or not demand for second-hand CVs is set to rise and whether the growth is on the fast track or not. Of course, if you look at Bharat Forge, that number indicates a completely different picture. But let's try and understand where this is headed a little bit more. We have with us Kinjal Shah, the VP and Co-Group Head Corporate Ratings at ICRA, joining in, and Kulwin Sira, ED at GNA Axles, as well on the show right now. Kinjal, Kulwin, both of you, thanks so much for taking the time out. Kulwin, if I could start the discussion with you, the domestic CV industry growth over the last few quarters has been aided by multiple tailwinds, pickup in mining, infra, construction activity, higher replacement demand, and improvement in macroeconomic environment as well. Do you expect the growth momentum to continue like this?
Good morning, first of all, and thank you for taking me here on this panel. And yes, there has been a tailwind in the last 3 quarters, as you can see. And thanks to the scrappage policy being announced for the government vehicles, that this will carry forward now. And we hope that there will be better tailwinds in the future. And in the long term, the picture looks still good, and we can expect this as around 7 to 10% growth in the CV industry in the coming this financial year.
Right. Kinjal, although we have seen a solid recovery over the last few quarters, we've not yet reached the pre-COVID high levels. How soon could we get to that mark?
When you see the CV industry, we usually typically bucket it into 3 segments. That is the LCV, M&HCV, and the bus segment. So, per se, overall CV industry, it is yet to reach the pre-COVID levels. But if you go bucket-wise, on the LCV side, we have already reached the pre-COVID levels. But the highs of FY 2019 that we would be still reaching in FY 24 or 25. Similarly, on the M&HCV side, we would be very close to reaching the pre-COVID levels in FY 2024. Buses segment, we are still much away because obviously, there has been a change in the overall way the corporates have been working. The reopening of the schools, offices did fuel a lot of demand on the bus segment, and we are seeing a significant growth here. In the current year, we would see 120 to 130 odd % growth in the bus segment, primarily because of the low base. But yes, inherently there has been some change in the way the corporates operate, and that's why the demand for bus segment will be slightly lower. But overall, we are very close to reaching the pre-COVID level soon. But reaching the highs of FY 2019 is still some time away.
What's the outlook in terms of CAGR growth over the next 3 to 5 years? I want to understand for the industry as a whole and for GNA Axles as well.
So, if this is for the domestic market, then that contributes to around 40-45% of our sales. And in that, we are again into off-highway and commercial vehicles. And off-highway is a cyclical demand, as you can see over the years. And now the season is going to start in the coming months, and it's going to, I think, going to surpass 5 to 10% from the previous year if the things go strong in the off-highway segment. And the CV has got some tailwinds because of infra projects and obviously e-sales and etc. And that is helping the CV industry. And obviously, when the BS6 was introduced a few years back, at that time the market went down. There was a BS4 sales were they produced more of those before introducing the BS6 because of the cost difference as well. And now those are not there, and thanks to the scrappage policy, and hopefully that will be the next phase of it, that the commercial vehicles it will be introduced in the commercial vehicle segment. So in the long term, we see it continues to grow.
Kulvin, let me draw your attention to what we heard from Bharat Forge yesterday in the con call. They are not sounding very optimistic about the US demand per se, and the Class 8 truck sales, which is in representation of their core business, is slowing down. So do you think we should read too much into what Bharat Forge has indicated? Because ultimately they are the market leader, they are an indicator of where the global demand is headed.
So yes, you have said it rightly. But the thing is, for GN axles, either we have gained more share in the North American market somehow, and the thing is, if the demand is high in the North American market, like last year they did was they stopped the bookings of the new vehicles. They stopped the bookings of the trucks, and that they wanted to correct the lead times for deliveries basically of the vehicles. So they wanted to correct that, and after till now our demand is stable for North America.
If ICRA is of the view that the domestic CV industry is steadily growing, and since you mentioned that it will go back to the pre-COVID levels, are you also factoring in that right now things, at least on the export front, are slowing down, things on the domestic front are also slowing down? Do you think that could impact your forecast?
So when we're saying the domestic industry, as of now, we are forecasting only for the domestic demand. I mean, we're not talking about the exports demand. On the domestic side, yes, I mean, the growth will slow down. And that's why, I mean, when we say FY24, the CV industry will grow at around 7 to 10%. The growth is lower than the 25 to 30 odd percent that we will be seeing in FY23. So obviously that is coming because of the high base. 2 strong years of growth in FY21 and 22 at around 25% plus. So because of the high base, the growth will slow down. Yes, there are certain headwinds as well because of the increase in interest rates. The total cost of ownership for the fleet owners has definitely increased. However, because of the freight rates remaining high, the overall economics for the freight operator viability has also been unfavorable. So while there are certain headwinds, but for the domestic market per se, the infra push that the government has had, especially the 10 trillion rupees outlay that the government has called out in the recent budget, that will definitely fuel up several construction and mining industries. And that is what is expected to help fuel the demand for the CV industry as well. Exports, yes, definitely there will be some slowdown, but domestic industry, we do expect to see a sizable growth there.
All right. On that note then, Kinjal as well as Kulvin, we'll let you go. Thanks very much for taking time out and joining in and giving us a sense as to how things are shaping up and what is really aiding the CV growth. Just a quick glance.